And now that we're halfway into earnings season, some trends are emerging. Bob Pisani has more from the New York Stock Exchange.
We've reached the halfway mark on earnings season, and it's often the case there's good news and there's bad news. So the good news is the U.S. consumer is going strong, and that's been the key to keeping the markets up, coupled with fading recession fears for 2020. Overall, third quarter earnings growth is down less than analysts expected at the start of the month. It's basically flat. The bad news is everyone was banking on a fourth quarter bounce in earnings, a little bit better. But earnings estimates are coming down for the fourth quarter, too, basically in half from where they were a month ago. Just look at all the cyclical groups. These are the economically sensitive groups like energy, industrials, materials. Estimates for those sectors have all come down over the last few weeks. They have big global exposure. Industrials were expected to grow 4%. Now they're going to be down 2% for the fourth quarter. These are global manufacturing slowdown issues, particularly China. The bottom line is the markets continue to position not for any kind of full-on recession, but for slower growth in 2020. And that's why these cyclical estimates keep dropping. With low global growth and no recession expected in 2020, the single biggest mover of the markets remains the U.S.-China trade wars, followed by the Federal Reserve's decision on interest rates. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.